Qualcomm stock has gone up 71% in 1 year. Can it keep rising? Does it have the right fundamentals? Are the financials good after their first quarter earnings? Well, I'm going to look into that and answer that question in this video and come to the conclusion of either buying more shares, just holding my shares, or selling my shares in Qualcomm. Qualcomm is a large semiconductor company. They do the best in communications devices like smartphones that Apple sells. They're also putting their chips in cars, and they're putting their chips in Internet of Things, meaning devices that are out in the field, in places, and communicating with some type of central command center, some central server reporting what that device is seeing. Overall, it's been a very successful company. It has a large market cap of 203 billion. As I look at the financials and share with you my opinions, keep in mind, I'm an individual investor. I'm just sharing my analysis as an opinion, sharing my journey as an investor as I continue to grow my portfolio. I am not providing any financial advice, nor am I recommending that you buy Qualcomm stock or sell Qualcomm stock. Please make your decisions on your investments very carefully. Now let's take a look at the fundamentals of Qualcomm. So the revenue of the company is 36 billion. This is a large company, and their forward PE is just 17.8% or 17.8. The dividend has dropped down to 1.87%, and the reason for it is that the company stock has gone up so much, it's really brought down the dividend rate. It's kind of good news is bad news on the dividend. Analysts really like the stock. They have a buy rating, but it's really fairly priced at this point. The financials look good. The company has been growing, but this is a cyclical industry. They've been growing in 21, 22. They didn't have growth in 23. But as we look at their Q1 earnings, we'll see if they grew in the first quarter. They are a high cash flow producing company. Their cash flow from operations is a nice $11.2 billion, and their CapEx is only $1.3 billion. So it's a really high net free cash flow that I'll use in my valuation of the company based on free cash flows. The most valuable companies on the stock market all produce high free cash flow. And the reason why this has a big market cap is that free cash flow. The balance sheet looks good. They have $11.3 billion of short-term investments in cash. Their debt is $14.4 billion. And when you add current debt, it's another billion. So it's about $15.5 billion. So not too much debt considering that they're producing about $11 billion of free cash each year. Balance sheet looks really good, well below 3 times net to EBITDA. So very good balance sheet. Cash flow is just looking fabulous. And the income statement looks okay. Looking at their forecast for earnings per share, the earnings per share for the company is expected this year to be $9.98. I'll use that in my valuation and then grow nicely, 10.5% next year, another 3.7% in 26, and then 27 will grow about 7%. So good earnings per share and good growth rate on that earnings per share. There are 22 analysts covering the stock, so it's a very well covered stock. They don't expect the stocks are going to rise a whole lot, but they do have a favorable opinion on the company. Year to date, Qualcomm is up 29.8%, and they announced their earnings on May 1st. And you can see that from May 1st to this point, it's up almost 11%. So investors really like their earnings. They saw a lot of good things in it. I'm going to jump to the earnings in a minute to take a look at, what was in that earnings report that really drove the stock. Just taking a look at the stock over the past year, it's up, almost 75% if you measure from 1 year ago. So it's been a really positive stock. Over the last 5 years, it's had a really very high stock price in the latter part of 2021, and then it dropped, and it had a really nice low point in 2023, as well as recent as October 27th, 2023. So from that point to now, just over the course of like 6 months, it's up 71%. Wow, what a rise. So the stocks really offered up value investors really good prices to buy into Qualcomm. Let's take a look at their Q1 earnings and see how that looks. So overall, investors really like the report. The revenue really went up about 1%, not a big rise, but profit really changed. It went up 11%. So really good to see that net income is up 14%. And that, I think, was the big positive, as well as the guidance that the CEO provided is that they're going to have a very good year. I think they're through the negative cycle they were in with regards to the markets they serve. And for the rest of 2024, Qualcomm is very optimistic that they're going to do really, really well. I completed a valuation on Qualcomm using two different approaches. The first one is looking at all their free cash flows and looking at a forecast of those free cash flows and getting a net present value of those cash flows in today's dollars. The other is to look at their earnings per share and try to get a value per share using earnings per share. Let's start with cash flows. So I'm using last year's cash flows, but increasing them by about 7%, which is conservative. They're really off to a great start with regards to free cash flows. And I took a look at their Q1 numbers, and they are already reporting that they're well ahead of last year. So 7% is a good rise. For year 2, 3, 4, I'm going to rise those cash flows by 6%, and then terminal value by 4%. All cash flows after year 4. I'm going to use a discount of 8.5% and get to an intrinsic value, a net present value of those cash flows are $230.4 billion. The cash on the balance sheet is $13.8 billion, and the debt is only $15.4 billion. So the equity value of the company is $228.8 billion, but the market cap is only $203 billion. So it offers a 12% discount if we look at the free cash flows the company is going to produce. Earnings per share, some analysts expect it's going to be higher, but I'm going with a conservative number of $9.55, a PE of 23. And I believe they're going to grow those earnings per share by 8% going forward. So based on those metrics, I get a value per share of $237.22. Current stock price is $182. So there's actually about a 30% discount if we look at the earnings per share method. When I blend the two, I get to an 18% discount. I put more weight on the free cash flow method. And that's a nice discount on a high quality company. So should I buy, hold, or sell Qualcomm? Well, I'm going to look at the company, I'm going to look at the balance sheet, and I'm going to look at the discount available on the stock before I make that decision. That's my process. First, with the company, I think it's a very good quality company in an industry that I want to be invested in, semiconductor. I've done really well in semiconductor, have bought companies, owned them, and then sold them with really good gains. And they also pay really nice dividends. This company is really operated well. They focus on their end markets very well. They come with very good innovations, and they're set to really grow. So overall, I like their management team. I like the company. So I really am bought into the company. The balance sheet's in excellent shape. They have almost as much cash as they do debt to begin with, and then they produce really high free cash flow. So I'm very comfortable that their balance sheet is very high quality. Discount. An 18% discount is reasonable on a really good company like this. It's just a high quality company. I'm still going to be holding. Why? Because the stock has really had an upward trajectory, and it's really, really great to see the company do this well, going up, just almost 74% from latter parts of 2023. I'm going to wait for a nice pullback. We had a good one here very recently from in April. The stock went down upwards of 10%. So I think the market's a little expensive right now, and I'm willing to bet that there will be a pullback on Qualcomm. I'll be prepared to buy more shares when there's a pullback on Qualcomm, but for now, I'm just going to hold my shares in this really good company. As a value investor, I wait for a company, a high quality company like Qualcomm, to be discounted. And this is a perfect example of a company that has been priced at $180 in price, and they've been priced at $110, all within the last year and a half. And really being patient, doing my homework, and then finding the right acquisition price is the goal with a stock like Qualcomm. Buying when it's discounted and knowing that this high quality company will rise in value overall over time. So that's my technique. That's my strategy on value investing with really good companies like Qualcomm. Thanks for watching the video. I hope you found it interesting.